more or less just buys, right? You don't have any money at risk, you don't make any money, right? It's just pretty much a bias, right? So even if I got it wrong, it would be totally fine, and that's something you also have to bring with you guys. The only thing which matters, alright, is not what you're thinking the market does, is what you know the market does. And the distinction between these two things is very large, alright? And this is something I've tried to at least explain for everybody to like just that long, because what a lot of people think is if they get their bias wrong, alright, is the end all be all, alright? And a lot of people just trade the bias, which is totally wrong. Like, I don't get it at all, alright? You should have a bias and you should have a separate model for executing on the bias, alright? And the model you're executing on the bias, that's the thing which you need to get right, alright? It's not the bias which you need to get right. So even if I was totally wrong, let's say I was saying this Friday, which you can just send up to the Friday right here. You can go back to the last call. It's already uploaded to YouTube, so you can check that out. But I actually said and talked about a potential for a lower dollar reaching down for the specific sell side liquidity down under here. And that's exactly what I think will happen today. I think we have a spooling program, so and that's a model. That's a model for executing on the bias. But if I would not see that model, if I would not see the step-by-step process in the directional manner I was thinking the market would do, I'm not gonna execute. Now, am I gonna execute on this? No, I'm gonna wait for an STA. So I don't execute on spooling programs. All right. Not so much. I forward them, I collect data on them, but I'm not really that comfortable with risking money on those sort of things, on those on that model specifically. Um, yes, but overall, all right, what we are looking for, like I said, we were looking for was overall this Friday, and we were looking for the rest of the week to pretty much bearish, right? Why were we bearish, right? Well, we were bearish because in an overall sense, we want price to be bullish, alright? But for it to be bullish, as y'all in accordance to my methodologies, we need to sweep all sell side liquidity for us to then have more buy side liquidity resting on that side for us to reach for those things. Now, for you, that might overall sound very complex, but in a sense, it's not at all very complex, alright? It's just a liquidity sweep, you could say. Alright? And I just pretty much think that when we have more buy side liquidity than sell side liquidity, we're gonna reach for buy side liquidity, and when we have more sell side liquidity than buy side liquidity, we're gonna reach for sell side liquidity. That's my structural way of reading the markets. It's that easy, guys. It's literally that easy. Now, so I was just thinking we're gonna reach for this low right here, and so I was just bearish on this week. Now, I'm gonna go to a week-to-week basis. You can see we've had a quite large down week here compared to many big up weeks, or small up weeks, which of course, as you all can see, will just erase a lot of the upside, right? But it's good to erase a lot of upside because that increases the real imbalance, meaning it becomes high probability for us to have this as a terminus, and a terminus is another thing. It's just a protected low, I would say. And if this is a terminus, right? If this is something which price should not go through, if you think about it, and we reach in for it, but we also have a real imbalance, if you think about it, and we go from that imbalance, meaning the imbalance is growing, and we go from a protected low. Price will only have that much wiggle room, alright? And if you have, compared to a large extent, 1000 pips of a wiggle room compared to 50 pips of a wiggle room. And what we mean with a wiggle room is like where price is gonna reverse. Now, if you have a model, you're executing in that 1000 pips of a wiggle room compared to the 50 pips of wiggle room, it's much less random that in the 50 pip wiggle room, because imagine you're gonna have a stop loss which potentially is 5 to 12 pips, which just brings it down to 40%, like 40 pips of a wiggle room. And if you think about it, the chances of catching a model which pretty much exceeds to be a normal 1 to 5, right? If you think about it, in an or in a just 40 pip wiggle room compared to a 1000 pip wiggle room, um, the percent chance increases dramatically. That's why I've been waiting. I don't know if you understand what I'm trying to explain here, but the only thing I can show you guys in a visual way is that, well, I've been waiting for an STA in this room, in this area right here, of this 50 pip area right here. Now, the reason for it, like I said, is because I know a reversal is coming towards the upside. Alright? But in a reversal, as the markets is to some extent random, could still have happened here. Right? A reversal could have happened here. But this would have been a much larger wiggle room. Look at this. Right? Look at this. So, I know since the wiggle room here is much smaller, that this is a higher probability area of looking at a setup compared to this upper, like this whole part here. And of course, that brings me to the conclusion that I should have stayed out this week, and that I should have waited. Alright, that I should not have executed. And did I execute? No. I pretty much waited throughout the whole week. Now, a lot of people like to trade against their buys, and that's also okay, but you should have a model for that as well. So like I said, you should make a big distinction about I would say there's 3 major topics we have already covered here, just in this little short sequence of the call. Alright, we have covered areas of reversal, like key areas where you should look for a reversal. We have covered when then to not trade and when to actually wait for a model, let's say. Alright, you never look for a model, you only wait for a model. And we've also covered the bias and how it distinguishes from the model you're executing on the potential bias. Alright, and we've talked about bias not being important, and we've talked about overall the model you're executing on the bias. That's what should be important, because that's pretty much what makes you money, that's what makes you lose money. Alright, so let's go overall into a forward time frame, and let's go down here a little bit. And as y'all can see, like yesterday was just a clear manipulation day. A lot of people were thinking this would be the reversal, but yet again, alright, you should have to some extent, you should have just a little bit of intuition-based rules, alright? And an intuition-based rule I have, alright, why is it intuition? Or it could be potentially mechanical, but to some extent I would say this is intuition, is that I never trade against engineer liquidity. I like all engineer liquidity to get swept before I pretty much go in and try to execute on my system. Now what I mean by this is also really freaking important for everybody, is to not execute when I have equal lows. Alright, so you can see here at equal lows. So even if I saw a spooling buying program, would I buy here for a long run for up here? Well, potentially, like as I said, the market is to some extent random. So to some extent we could have pretty much delivered up here, but as pretty much the probabilities was not that high, alright? It was not, I would personally say, over 50. We would overall reverse here. Like there's a high likelihood of a reversal then and displacement towards upside, right? Because you have to think of the market based on probabilities, but to some extent it's still random, right? But you can still pretty much make money off the markets even if it's random, right? Because you can just look at the probabilities and you should trade with the high probability things. As I've tried to explain here with determinants, etc., and determining key areas where it's higher probability of a reversal, or you know, some other thing like that. But as you can see, we had equal lows, and so the market pretty much just reversed towards the liquidity, right? Since that's pretty much what it usually does. So if you're wondering, like, oh, but the market, like, how does it move? Where does it move? Well, from a large extent, and this is of course from my perspective, I think it moves to a low liquidity area to a high liquidity area, and the low liquidity area becomes a high liquidity area, so it needs to move back to the high liquidity area. At least for currencies, to a large extent, this is. For indices, etc., etc., equities is usually bullish, all right. But you have to understand when it's bearish, and you have to understand why it's bearish. If you're pretty much going in shorts, that's covering NASDAQ, etc., etc. So I would personally never be to a large extent bearish on NASDAQ, but I would try to understand if it's bearish, why it's bearish, and potential for us pretty much to position ourselves in a large extent more shorts, right? So let's just overall go into then one other time frame here. So as y'all can see, clear example of an spooling selling program right here. We've talked about what a spooling selling program is, but it's just pretty much down throughout two large ranges, two large sessions. Personally, I don't use time that much, but in this case, I would pretty much use time. I try to just look at the conditions in price rather than time. Alright, so not focusing on what price does in a given time period. I just try to focus on more or less what price just does, if I'm honest, or what I think it will do. Focus on, but you can see like clearly here we need to just continue on lower since we have large extent engineered sell side liquidity. So I would just have my bias bearish, bearish, bearish today. And you can see it's not on a 4-hour time frame. It looked far, but on a 50-minute time frame, look, it's just down in here. That's our level for reversal. That's just pretty much what I'm looking for, just under this T's equal lows down in here, under these equal lows. So you can see equal lows, not what we like, right? And of course also equal lows. So equal lows, equal lows, equal lows. Large extent sell side liquidity. Now what would happen if we take out the sell side liquidity? Well, there's one possibility for us to reverse, but another great possibility is if we see displacement towards the upside. And listen to the key word, alright? If we see a reversal towards the upside, we will have a high probability for it to be a breakout for the people trading trend lines towards the upside. And that's you can see here, trend line right there. I don't trade trend line, but potentially someone here does. But yeah, so we have overall a large possibility of seeing overall us reaching up higher rather than lower, because if we are to see low prices, I think it will just melt through this area, and we'll see if it melts through this area, alright, or if we see displacement towards the upside. But I think it's worth the risk to go in with a model down in here in this high probability area. And that's also not a key thing I need to cover, just a key concept pretty quickly here. But you need to understand when you should execute and when you should not execute, right? You should always try to have the probabilities on all sides with you when you're trying to execute, right? You should try to assess your risk, so you should always ask yourself prior to taking a trade, is this in a high probability key area? Or is just excessive risk for the position I'm gonna potentially take, alright, in the markets? So that's two things you should ask yourself prior to taking a trade, and which will help you overall stay very responsible for the position you're gonna take. But yeah, you know my bias now. So on a higher time frame, like I said, I'm just gonna sum it up to a conclusion here for the people that like it by yeah. But yeah, we overall have looking for lower prices, then mega higher prices. Alright, I'm very bullish, like I said, on the dollar. So I think we're gonna just reach up higher after this. But of course, we could also reach down lower. So we could see something like this. But then it's gonna just melt down, alright? Gonna see some potential small swings towards the upside. And also something you could wait for if you're not comfortable with a reversal. Wait for a bullish day to close bullish, right? Wait for a change in state of delivery down it here of the C displacement, and then go in and look for a model to execute on upside potential for a dollar. Now the same thing would be true overall for downside potential for the dollar as well. So same thing is true. Alright, so potentially here you could just quickly execute on a short position for bearish dollar. Now we talk about long position for euro. You know, you have to always think of the DXY. Alright, when I say short logs, I mean on other foreign currencies. Alright, I'm talking about other foreign currencies which you can execute on. I never traded the DXY. I don't know if you can actually, but you know, I don't know, guys. I don't know. You guys tell me. And I think to a large extent, some of you guys are much smarter than me. I'm just trading. I'm just a normal ass trader, if I'm honest. So I'm not nothing special, right? You should not take my word for something special, right? So if I say something, you should not think it's a special magic word or anything like that. It's not the end all be all. You have to trade your own methodology. You have to trade your own way. You have to keep it to your own way. Keep trading personal. Keep it consistent. Because that way you're pretty much gonna succeed in trading definitely because you're gonna stay that long. So your mentals and everything is gonna be in check because mental psychology. A lot of people talking about it as something crazy, but it's not really crazy. Yeah, you're gonna be comfortable with doing the things you want to do eventually, given enough time. And so if you have like you can think of it as this. So do you think a person trading for half a year um, compared to a person trading 5 years, who has the better psychology? For me, at least, since you're gonna go through a lot of different emotions, etc., etc., you're gonna face a lot of different difficulties, both mental and physical, when going through trading. And it's a higher probability chance that you have gone through more emotions trading 5 years than 6 months. So even if someone tells you, "Oh yeah, I'm profitable. I've just traded 6 months," it's not really the case because you're gonna see them going through some or many mental hurdles. All right. It also it depends on what you describe as profitable. Because profitable, you could be profitable for a day, you could be profitable for a week, you could be profitable for a month, and you could also be profitable for a year. But then you can also be profitable for 10 years, 20 years, 30 years, etc., etc. And if I describe myself as a profitable trader, but then I take it into a perspective of 30 years. Of course, I'm not even 30, so I am not profitable then. I need to wait till I've traded for 30 years to call myself profitable. Uh, and yeah, I think you just have to have the mentality. If you're profitable for one day, of course, since trading is fractal, alright? If you're profitable for just one day, alright? Be it not random, alright? Be it you execute on probabilities, you can literally call yourself profitable because you can pretty much take that one day profitability which you executed on a model which has probabilities which is profitable behind it, and you can pretty much extend that to a month, then to a year, all right, and then uh, to 10 years, all right. Now you'll always take losses, all right. There's some other things we're gonna talk about, all right. But losses is of course very freaking good, all right. A lot of people in this space, thanks to social media in part, does not like losses, and I don't know why. For real, you're just executing on a system. Always, all people take losses. All right, you just gotta accept it. Uh, and that's why, like, yeah, it's not really good to listen to people telling that there is an end all be all strategy. If you think about it, um, if you think there is, congratulations. But I don't know. For real, for me, I just execute on probabilities. I stick to my methodologies. I just try to improve my system. That's it. Uh, and yeah, just I don't know. I'm not trying to crush any dreams here, but don't look for any enigma, alright, guys? Please, please. And don't look for anything crazy as well. Like, I'm not crazy. I'm just trading probabilities. You can be equally as crazy as me, just trading with probabilities. Now you have the draw liquidity right here. We have talked about why this is a draw liquidity as well for the euro. This is draw liquidity because it's a major sell side liquidity pool. Now, as I've talked about in accordance to my methodologies, if we have take out large buy side liquidity pool, we're gonna be left with less buy side, and so we're gonna go for the larger sell side liquidity pool. Since if it's larger sell side and buy side, we're gonna reach for the sell side. Same thing again, alright? Same thing in accordance to my methodologies. So one thing you gotta keep in mind, that's what I look for in a structural manner. Of course, I use what people would call fundamentals, and that's what I rely on majority of the time, or for the most part. But I just try to keep it humble for you guys today. I just try to keep everything concise and focus on a structural manner. And so overall, we're gonna reach up higher. Gonna overall, as this is a protected high. Why is this a protected high? Well, okay, think of it. In the quarters to trading pool, for example, it would be a protected high since we have made a break of structure here, and we have taken out large quantities of buy side liquidity here, here, and here. And that would be a protected high for me, at least. I would see no price for price. There's no reason for price to go higher than this. Both in a matter of a buy side liquidity way of thinking, as like specifically the amount of buy side risk over here. Of course, there might be some buy side, but I think there's, as I said, more sell side. Meaning, I think price has a higher probability of reaching for the sell side rather than the buy side. That's why it's a protected high for me. So if we have taken out large quantities of buy side liquidity, right? I think from here, from this, there's going to be more sell side liquidity, meaning a higher probability for us reaching down lower. And since there's a more probability of taking out this low than this high, which has a lower probability of getting taken out, becomes protected high, if you understand what I mean. But since the market is random to some extent, it will of course potentially get taken out in the in the future. Like, it has still the probabilities of getting taken out, and that's something you gotta keep in mind. So looking at it, right, we're overall waiting for the buy side to get taken out right here, and then we're waiting for us to reaching for sell side liquidity. We're gonna be bearish for a couple of weeks here. It's just good for us to have a waiting game here, right? Since of course we're gonna have a longer selling day or selling weeks, so the weeks ahead is gonna be crazy good. All right, and if I were to trade my model based on buys, would have been losses? Well, potentially, but I think it would have majority of break evens, right? That's why you just gotta keep at it. All right. Potentially you're wrong in the buys manner, but that should not so much affect your. That's also something you could think about. So just write this into your notes, like your bias, right? Since it should be independent, the bias should be independent of the executions of your model, which you're executing on your bias. Since both of them should be independent of one another, alright, the bias, being wrong on the bias, should not so much affect your edge. It should just improve your edge, but it should not affect it. Meaning your edge should still be, to some extent at least, be independent of your bias. It should be independent of the direction. It should be based on probabilities, therefore. Alright? Hopefully that makes sense. But write that into your notes. So, meaning you can trade with a wrong bias and still not take majority losses. Alright? But when you're trading with a bias, when you're trading with higher probability extent of what you're looking for in accordance to your methodologies, you should be able to take more wins and less losses. Hopefully that makes sense. So of course, like I said here on the Friday, we were only to have a bullish week, and now that's exactly what happened. Am I proud of this? No, because I've not even taken any executions on this, since I overall am bearish on a higher time frame. I want to wait for the structural higher time frame narrative and the short term narrative to be aligned for me to then go in and execute on my system. And I still could have executed on my system, and I would still have made possible profits, but I don't know if you know this, but if the bias is not perfectly aligned, if the short-term bias and the long-term bias is not perfectly aligned, you're not gonna see my model you're not gonna see my step-by-step process be in the markets. And what has that allowed me to do, and what has that allowed my students to do, as y'all will see here on a 5-minute time frame overall, that has helped us to overall minimize losses, because we minimize the amount of models we're seeing in a week, which we're overall thinking is going to go against our higher time frame narrative, and it overall therefore takes away the mental hurdles which a lot of traders could face, like FOMO, etc., etc. Because if there is no model, there's not gonna be any trades, and a lot of people are crazed out because I've only taken, I think, 30 trades this entire year. For me, 30 freaking trades is much, alright? It's crazy much, and it's even much more than I usually take in a year, alright? Like my usual average year is not 30 trades, it's actually a little bit less, right? But right now, this time I've taken 30 trades this year. I don't know if it's good, I don't know if it's bad because I've not gone through that specific data. I will do it eventually, of course, but we will see. We will see if it ends up good or if it ends up a little. If I end up underperforming my previous years. We will see. We will see. But we will see. I'm just gonna keep at it. You can see the buy split program here. We're gonna just reach for the buy side, so it's gonna be crazy bullish here for a while. Hopefully this entire Friday. So hopefully we take at least out all of this. Do what people would call breakout structure towards the upside. And then of course we're gonna just take out this buy side liquidity here on Tuesday or Monday, and then just have an STA down. Oh my gosh, this would be beautiful. This would be beautiful. And notice here. Here you have a higher probability area. You have large extent buy side liquidity, which is going to change because then the sell side liquidity is going to be more on one side, meaning you're going to reach for more sell side liquidity in a more probabilistic manner. You can actually do some research about this. When there is more buy side liquidity, you reach for buy side liquidity or reach for sell side liquidity, find out probabilities for that. Alright? I just had a call for students about the different ways of collecting data. So there's like 4 different ways of collecting data. I've covered them all for them. So this would be in the topic 3. This would be collecting data on specific structural things, alright? But not necessarily for your model, for you to understand in a capacity where your model should exist and where pretty much it will get created. So you can see here, this is high probability area for seeing a reversal. We should pretty much just reach down lower from there. Crazy good, crazy good. Alright, let's go to NASDAQ, alright? So now you know, hopefully, my long-term buys, short-term buys on the DXY, long-term buys, short-term buys on EURUSD. So let's go into NASDAQ here. We can go here. Let's go to the daily. Let's go through here. So, what I talked about this Friday right here, I don't know if you remember it, I'll just gonna pretty much send you all the call. Hopefully you guys at least have gone in and looked at the call. I'll pretty much do it. I'm gonna just send this to y'all so everybody will be able to look at it, to actually double check the things I've already talked about in this call, because it's always good to have a fact sheet, right? And here you have it. I uploaded this call pretty much last Friday. You can go and check on the YouTube, etc, etc. And what I talked about here, and hopefully some of you guys were in this precise call, but what I talked about was that, well, we could have seen definitely a bearish week for NASDAQ, reaching for this sell side liquidity pool. Now, we had a bearish week, right, as y'all can see. The weekly price has been bearish, but I would want to see it being even more bearish, right? I would want to see this be even more bearish right here, which is a little bit sad, not something I've seen, but I've seen such a nice setup right here. Oh my gosh, this setup was so good, but I missed it, alright? I've not been looking at NASDAQ this week. I've just not been trading at all. I've just taken a week off, I would say. But look at this previous daily high right here. We pretty much swept that shit right here. Previous daily high. You can see we swept out a lot of large liquidity here, and then we pretty much reached down lower. Look at this. Look at this. Bah, look at this. But I think this was news, so it was news driven. So I don't know if I missed anything or anything like that, but we'll see, we'll see. But I would personally look for just buy side liquidity get taken out, and I would look for shorts if I'm honest. So that's something potentially I should do. But as I said, I'm a little bit shorter here for us to reach for this. Now once we have reached for this, I'm gonna be bullish for the upside. So long term buys, I'm bullish, as I'm gonna just cover here. Short term, I'm bearish, right? You know why in a fundamental manner why I'm this. But now you also know it in a structural manner. It's just because I think we've taken on large quantities of buy side liquidity, you can see here, and I think we have more sell side liquidity, which we need to find an equilibrium between the buy side and sell side liquidity of them. All right, hopefully that makes sense. So I think we're gonna be just bearish. All the students pretty much hopefully knows all of this because I've covered it so many times. But let's now go into some questions then. Let's just now go into some questions here for you guys. So just think about what I've covered in this call. I'll give you guys 5 minutes of thinking time. I pretty much give you guys 5 minutes of thinking time of the things I've already said in this call. Pretty much reflecting on the things I've said, and pretty much do you just for you guys to come up with some questions, which is of course potentially some questions you could help you guys. So if you're wondering anything about what I'm doing, etc., etc., but you can just come up with anything, all right? So yeah, just write all questions here. We're gonna cover that from top to bottom, all right? So I'll give you guys 5 minutes here. Okay, guys, let's see what you guys have written as questions. All right, let's see this. Let's see here. So let's start with the top. Let's just go from the top to bottom, and I'll just try to pretty much answer all of these uh, in a greatest extent as possible. But before we go into this, just note that what I'm telling you guys is not the end all be all. It's just what I prefer. It's just my perspective on things. Just needed to say that because a lot of people think what I'm saying is pretty much written in stone. And of course also, and what I mean by that is just that, well, a lot of people think I'm the goat of trading, and I'm not, alright? In reality, I'm just trading probabilities, that's it. And I'm gonna cover all of this from just my perspective. I'm gonna try to include from your perspective of how pretty much I felt when or potentially was in your position. We'll see, we'll see. But do you trade ICT or what? I don't know. You make the conclusion, alright? I traded ICT. I've traded ICT. I would say I'm still trading ICT, but you make the distinction between me and ICT, alright? I would say, I trade my own methodologies, meaning I trade pretty much how I feel is profitable trading. Hopefully that makes sense. So I'm trading what I think works and what I know works based on probabilities. And that's the major distinction between me and ICT, alright? I don't trade intuition, I don't trade what I think the market will do, I don't trade what I believe the market is doing. I trade on what I know the market will do, if that makes sense. So that's the distinction between me and ICT. I would say I'm still an ICT trader, etc., etc., but I just trade what I know is profitable for me. Alright? That's just literally it. You have analyzed trading pool models. Okay, we're gonna cover it. We're gonna cover it. Would you say as a trader will change things? Trader changing your model. Stick to it depends. So I think a model is ever evolving. Personally, I would always try to improve my model in accordance to what the market conditions in a close manner of historical data has provided. Meaning the markets potentially, like I said, and like many people actually are saying, I would say they are evolving. Alright, markets pretty much change, and your model will change with it because you as a trader will not stay the same. Alright, you will change, so the model will eventually change a little bit, right? But you think it's gonna change in a year, 2 years? I'll personally say it's not gonna change month to month. It's gonna change with the markets. Since you're collecting data on it, you're gonna notice things which used to work on your model but then does not work or works progressively less. You're gonna exclude those things and you're gonna include new things. And now we're not talking about concepts. Now we're not talking about PD arrays. Now we're not talking about those things. We're talking about ways to use those things. So, for example, you might notice that the market is very aggressive, right? Meaning that it leaves your overall, it leaves equal lows. It leaves many equal lows in the markets. This is just a hypothetical. But we were in a very passive market to be in a very aggressive market. Now, you can actually, I'll just show you guys this as well, because this is a very, very good question. On Euro, right, and on the DXY and on rest of the foreign currency markets, right, we were in a very defensive market here for approximately 2 years. I know a lot of people started trading in this period right here. So this would have been a defensive market where you have equal highs, equal lows. Now all of them eventually got taken, right? As you can see, we got taken, the equal highs got taken, the equal lows got taken, the equal highs got taken, and we were like pretty much in a higher time frame consolidation manner. But then the market changed for a more aggressive stance. You can see the weeks became progressively bigger right here. We went into more normal forex market conditions, I would say, or foreign exchange market conditions here. We went into much larger weekly downturns and much larger weekly upturns. That means just the market became more aggressive, meaning you gotta potentially see what overall like you gotta see just, oh, we're just leaving these equal lows, etc, etc. And for me, when we were in this passive market, when we were in this higher time from consolidation, I usually always thought of, well, we need to take these out, but I've changed it. So for me, we don't need to take it out, but I've changed it up a little bit to that I'm looking at a much. So if I have like 30 equal lows, we potentially will take out majority of them. That means 16, right? Or 15. We're gonna take out 15 of them, and they're gonna leave the rest of them, right? And then reverse towards the upside if we have more buy side and the rest in the sell side liquidity. Hopefully that makes sense. So it's an ever evolving thing, but it will evolve with time. It will not change day to day. If you know what I mean, it will evolve, but you will not notice it evolving. All right, you'll become better. The model will become better because you're improving it, because you want to improve it, and it's eventually gonna evolve because your mindset, everything is gonna change a little bit, and of course the market conditions are also gonna change. You're gonna adapt to them, but not on a day-to-day, but on a year-to-year basis, let's say. So, yes, hopefully you understand what I mean. So you guys, you're gonna stick to one model forever. However, if you have a model which is profitable, for your second question potentially, if you have a model which is profitable, alright, you could just have another model and you could be trading two models. So you can have a higher time frame model, meaning you execute on a, let's say, week to week, day to day basis, and you're waiting for weekly extensions, etc, etc, trading whole weeks. And then you can have a lower time frame model, or you can have two lower time frame models. You can have like a spooler programs, you can have like an STA, you can have an ST, you can have, yeah, exactly. So you can have multiple models, but I would say never take away the model which is profitable. Only potentially when it's profitable, when you're making money, etc, etc, and you want to trade more or more frequent. Potentially you don't want to trade more frequent, but if you want to trade more frequent, potentially just bring in a scalping model or anything like that. Hopefully that makes sense. Can you do it on gold? Let's do it. Let's do it. So like I've also said on gold, right, we've talked about it so much, but we have always been bearish on gold, or I've been bearish for week to week, or consolidation, let's say consolidation slash bearish. For me, consolidation on gold is bearish, right? So I've been more looking for lower prices on gold actually, and not so much higher prices. But it looks like I could have potentially been wrong, but we'll see. So potentially here, I'm just overall looking for downside potential on gold. I'm gonna be continued bearish on gold. I'm gonna be continued looking for lower prices, and that's because I look for us to be at an start slash mid or end of a recession, I would say. And in a recession overall, there's going to be less spending, there's going to be less inflation, it's going to be more deflation, and where there's more deflation, you're going to see lower prices on goods and services, but also on commodities. Therefore, so commodities is very closely related to inflation and deflation. If you have inflation, if the markets is seeing inflation in price, you're going to see gold skyrocket as a protection from, as a hedge for inflation, right? But if you're looking for more deflationary things, such as cutting spending, etc., higher taxes, higher tariffs, for example, you're going to see a lower gold, right? And I think gold is so overvalued. I don't know why it's this high, if I'm honest. Um, I think potentially it will even go down to 2023 lows, alright, or 2023 lows or highs potentially. We'll see, but that's eventually. That's eventually. I don't know. I'm not gonna speculate so much, but I think we're consolidation. I would be in a consolidation manner, meaning I'll trade both sides. I would trade both up and down. But I would say to a large extent, I'm gonna also be bearish. We're gonna see if I'm correct or I'm just totally wrong. But it's just bias, like I said. Um, why do you prefer? Hopefully that answers your question about gold as well. So hopefully that just a higher time frame perspective. I don't have any lower time frame perspective on gold, but what I would look for is just major buy sell liquidity or major sell sell liquidity get taken out, and I would trade the other side of that, other side of that. So hopefully that makes sense. So it's the same as last week. No, nothing has changed for me. Why do you prefer FX over crypto? Well, I don't know. That's a hard question. I have actually no idea why I trade forex over crypto. It's potentially because I don't know. I don't know. I've never tried crypto, so I cannot really answer that question if I'm honest. So that's very sad. Hopefully for you or for you potentially, but I don't know. I've never just tried to trade crypto. I think that hopefully that answers your question. All right. So been trading for 2 years now, trade so many models and got confused. I've tried getting an edge, lost 2 accounts already, currently in 6% drawdown on a 10k. Have you ever tried to collect the data, right? Have you ever tried to make your model profitable before you're trading profitably, alright? So a lot of people think, oh, I'm trading this way, I'm gonna stick to this way, but yeah, if you're sticking to, like, say, let's say the 2022 model, and a lot of people are saying it's profitable, is that the same as you being profitable with the model? No, there's a major distinction between those two things. A model uh, can be profitable, but do you really know if it's profitable? Alright, you need to overall, alright, forward the model until you have, let's say, 300 sample sizes, and look through those things, look through what you have done wrong, etc., etc. And it's gonna take you possibly a year, so you should not even be trading at 10k. I'm sorry, but I don't know. For you, trading, I would say, is hard. It's really extremely hard, right? You're trying to make more money uh, than a doctor in a potential week, right? So of course you gotta take a long time. So if you want to do it right, I would just pretty much stop trading any funded accounts, etc., etc. I would try to come up with a profitable edge. It could be whatever. You could trade trend line breakouts. You could do whatever, right? But you need to overall forward it. You need to make sure it's profitable. You need to collect the data on it. You need to make sure the thing you're doing is profitable in a systematic manner, alright? And then you need to stick to it. That's literally it. Then you're profitable. Have you analyzed trading pool's model? He seemed to be trading quite often. Yeah, he has a lower time frame model. His model is very freaking good. Very, very, very good. Um, so yeah, I really love his model for real. He trades lower time frame, etc., etc. So he trades more frequent. He trades more frequent. Oh, Nualsi, oh my gosh, bro. How you doing, bro? How you doing, bro? How Nualsi doing? I'm sick, bro, by the way. So I think you already know, but I'm sick. What do you think about CRT? I think it could be profitable. I think to a large extent, well, what I trade, people could call in an ICT or anything matter CRT. So just depends on if you're making it profitable or not. Like you could be trading, like people trading trend lines could think up trading trend lines, or trading trend line breakouts. It's just the perspective of the markets, and it's just pretty much how you analyze the markets and being profitable, right? Doing, yeah, bro. We'll see. We'll see. We'll see if I can get that, bro. Anyways, I think that's it. Do you have any other further questions? Right? Anyone having any further questions? We'll see. Nope. All right. The enter trade entry model. Do you enter trades entry model? I don't know what you mean, but I think you know. I think you wondering about like how I enter model. So like what I'm specifically looking for. That would be just a simple time-based liquidity sweep. All right, that's literally it. That's literally all I trade. So I just trade a sweep of liquidity. All right, you could call it trend line, false breakout, whatever. Right, I'm trading a liquidity sweep. That's literally it. And that's how I become profitable. See, one thing, guys. I'm trading one thing and I'm still profitable. See how crazy it is. See how crazy it is. Anyways, thank you all so much. Hopefully everybody appreciated this call. I'll see you all in pretty much a next call for everybody. I'll see you all. Thank you all so much. And bye, guys.